My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After last week's terrific run and a strong opening this morning, we got a hard reversal. Almost the whole afternoon, thanks to some saber rattling over the South China Sea. What can you do? Dow gave up 560-point gain to close up just 11. NASDAQ let us lower, plummeting 2.13%. S&P lost 0.93%. Some will say that this today was a short-term top. I think it was just a hideous all-day sell program as money managers were eager to lock in their gains. Who can blame them? The market was up 7%. NASDAQ was up 7% last week. And you know what? I think it could be short-term in nature. Still, it's not a great start to a very important week, the week that sets the tone for the whole earnings season. So what is the game plan for the next 4 days since I was away on Friday? You know what? We've already heard from PepsiCo today. It was a terrific quarter, huge upside surprise. Frito-Lay business keeps benefiting from the stay-at-home crowd. Although because of the sell-off this afternoon, Pepsi gave up most of its terrific gains. We also got a big semiconductor deal, Analog Devices buying Maxim Integrated for more than $20 billion. Takeovers, better than expected numbers. Normally call it a positive backdrop, and that's how it felt before the market really rolled over. But tomorrow's where the rubber hits the road, and it could be pretty rough. We hear from the best of the banks and the worst of the banks, J.P. Morgan and Wells Fargo. And I don't know if J.P. Morgan's results will be good enough to offset those of Wells Fargo. I think we'll hear a lot about bad loans from both of them, though J.P. Morgan has the balance sheet and diversification to handle the plan. Wells Fargo, though, well, they got a ton of personal loans and oil loans. Ouch. No wonder they have to cut the dividend. But it is run by Charlie Scharf. He's going to figure it out. We also hear from Citigroup, which is right smack in the middle. Now that Citi's had to suspend its incredible buyback, you've lost the best reason for owning the darn stock. Now, it's cheap, but it could easily stay cheap. Then there's Delta Airlines. Now, the Robinhood traders, congratulations, Robinhood, for taking in more money. That company's worth a ton, more than $8 billion. The Robinhood crowd, they love the airlines, even as passengers seem to hate them. Will Delta need more help from the government? If they say no, you might actually want to buy a different one. You might want to buy American Airlines, which needs the most help, but only for trade, please. Wednesday, Goldman Sachs reports, and I think they're going to blow away the numbers. This market's a trader's paradise, which should allow an investment bank like Goldman to put up a remarkable quarter from all that great firepower they got on the trading desk. And that's why we own it from my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club ahead of Wednesday's club call. It's going to have to focus heavily on the banks. We also hear from UNH, United Health Group, Dow stock. This pandemic's been fabulous for the managed care space because all sorts of expensive surgeries keep being postponed. And that could lead to a huge quarter. But the conference call spells out the future. Please don't trade before you listen to the darn call, because they could talk about politics and it could be murky. Thursday, more banks. I think the narrative at this point could be ugly. So Bank of America and Morgan Stanley will have to really shine to break the downward trend. Morgan Stanley can talk about their merger with E-Trade. I think it works for the same reasons Goldman does. Almost no uncollateralized loan exposure. As for Bank of America, they almost always report excellent numbers driven by their top-notch digitization strategy. Never seems to matter. Maybe it's the ETFs that lump all the banks together. Maybe it's the digital business that's baked in. Either way, the stock hasn't been able to rise above the rest of the group. No reason this time should be different. I wish I didn't have to say that, but that's how I feel. Big Pharma's been stuck in a rut lately, though the drug stocks came roaring back today. They're classic recession plays. That's what the market's telling us. And that's because of the reopening and then the reclosing. Or reclosing, opening, declosing. What's driving this action? We're going to find out when Johnson & Johnson reports. They have a terrific pipeline, and they're super focused on COVID. I bet they have a great quarter, but it might not matter because the stock ran up hard today. Perhaps the most important report of the week is one that people aren't buzzing about at all. It's called Taiwan Semiconductor. And that's because it has a huge amount of business with Apple, which was up so big at one point and gave it all up. Taiwan Semi is not allowed to mention Apple. First rule of Apple Supply Club is you don't talk about Apple Supply Club. But you can tell a lot from their orders. Taiwan, of course, is in good shape, by the way, the country. Why? They wear masks. Stick around. We've got a whole segment on why you should wear a mask. This is a brutal environment for restaurants, but we know there have been a few winners. The chains that dominate in takeout and delivery. Chains like Domino's. I think they tell a good story, as contactless delivery is the safest way to eat. After the closed Netflix reports, given that the stock's run more than 60% for the year, does it still have room? I think of Netflix as a worldwide entertainment service that's essential in the age of COVID-19. However, management tends to be pretty self-effacing. If they think sports are coming back, I bet they put the kibosh on their forecast and undercut the bull thesis. Listen to the call. Still, I would like Netflix into weakness. More on that later. Friday, we heard from BlackRock, gigantic alternative asset manager, and regular manager, too. The media loves BlackRock CEO, Larry Fink, because he actually has opinions. He has his own opinions about the world of stocks, the world at large, ESG, all sorts of things. Now that BlackRock's finished digesting PNC's sale of its stake in the company, and that was done by a fantastic offering, it was in the low 400s when the deal happened, it's now at 552. You don't need to worry about a potential equity deal, but you do need to worry about fee cutting. I wonder if Larry will give us any insight into the Fed's bond buying program, because BlackRock's orchestrating it. Finally, I know this is a small one, probably not on your radar screen's first horizon, okay? At the Airport Friday, why am I interested? Because this is a great regional bank. It is a top-notch franchise. It's in one of the strongest areas of the country, Memphis, Tennessee. It has branches all over the South. It's amazingly well run, and yet the stock sells for just 7 times earnings, and it sports a massive 6% yield. It's down 40% for the year. I get it. The economy's a mess, and the South's now having a horrific COVID outbreak. But maybe First Horizon's been overly punished? Bottom line, this is the week when we find out if the real world is going to intrude on the stock market world. And that's what happened in the afternoon today. But tomorrow's the big test. If the banks can rally, then maybe we've gone through the looking glass. If the banks get hammered, things could get ugly.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.